Okay, let's get started. Welcome everyone to tonight's webinar, Investing with the Stock Scores Approach. I'm Tyler Ballhorn from Stock Scores. I will be doing the webinar tonight as always. This is a webinar continuing on the theme that we discussed last week on Thursday when we talked about the elements of chart patterns and that sort of thing. I'm going to be taking that knowledge and applying it. On Tuesday, we did a webinar that applied my strategies or my concepts to day and swing trading. Tonight's webinar will apply my chart reading concepts to position trading. So the difference, of course, is that position trading is longer term, excuse me, where we're holding positions for weeks or months. Tuesday's webinar was more trading inside of 2 weeks, either day trading or swing trading. So itinerary for tonight, we'll have a little introduction, who I am, and then we'll talk about the stock scores investing concept, how I approach the market from an investor standpoint. I'm going to explain a little bit about how we measure performance. We didn't really talk about that too much on Tuesday, although we did utilize it, so I'll give you a little bit more in-depth discussion of that. I'll go through the economics of trading, the process for finding trades. We'll actually do some market scans, components of the stock scores approach to investing and how to become a stock scores investor. And then at the end, I'll take a few stock questions so that we can do some analysis on a position trading time frame. So if you have a question about a longer term trade, let's say you want to know where I think IBM is going to go for the next few months, that'll be the time to ask those questions. All right, so my introduction. I've been trading for 26 years, started when I was 19. I started with $3,000 of capital, some of which was borrowed off of my credit card. And initially, I traded on fundamentals, realized that that didn't work very well, so I started to use charts. And in the early years, I actually drew those charts out by hand. Eventually, the internet became a useful tool, and of course, nowadays, charts are everywhere. I developed my own approach, and that required my own tools. So 15 or 16 years ago, I developed the stockscores.com website, which is a tool for investors to apply mostly position trading. The tools on stock scores are really designed for position trading. When I do day and swing trading, I use some other tools. We use stock scores as well, but stock scores is really a tool for education and for market scanning for the position trader. So I will talk about that as well. I started teaching people my methods, I think in 2002, and have taught literally thousands around the world, mostly in Canada, but I've got students all over the place, and we'll talk a little bit about that tonight as well. So what is the stock scores investing concept? Well, to begin, simply, it's that most stocks, most of the time, are not worth trading because most stocks don't beat the market. And by that I mean, if the market goes up 10% in a year and your stock goes up 8%, you shouldn't be pleased because it does not beat the market. If you want to just do what the market earns, go out and buy an index ETF. There's lots of them available. They have relatively low fees and they're diversified, and it's a pretty simple way to invest your money in the market. So if you say, you know what, I'm happy earning the historical rate of return for the stock market, which is around 7-8% per year, then go buy the TSX 60 ETF or the S&P 500 ETF. There's some other mutual funds that are relatively low fee, and sit back and do nothing. If you want to beat the market, you have to be a little bit more of a stock picker. And in order to do that, you have to realize that most stocks, most of the time, are not worth trading because they just trade in a normal way. The key to finding market-beating stocks is a focus on abnormal activity, and I'll add to that and say that it is also a focus on chart patterns. But there is more to trading than buying the right stock. It is important to also manage risk effectively, preserve your capital, and of course exit at the right time while overcoming your emotions. The mechanics of trading, when to buy, when to sell, and managing risk, those are pretty simple. It's the managing your emotions part that can be difficult. It takes time to desensitize yourself to your emotional attachment to money, to desensitize yourself to risk. And if you're a normal human being, you're predisposed to fail in the stock market because normal people don't like to lose money. losing money is part of trading. And so unfortunately, if you don't like to lose money, not that any of us like to lose it, but if you're not prepared to lose money on some of your trades, you end up holding losers far longer, tying up capital, and taking bigger losses than you should. So what we want to do is focus on the market, but also have a strategy to get out with a relatively small loss when the trade simply doesn't work. And there will always be trades that don't work. I just went through my trades for the day, and only, well, 7 out of 10 worked, but that also meant that 3 out of 10 didn't work. And actually, out of the 7 that worked, 2 were only break even. So really only 50% actually made money. And that is just, you know, the kind of day it was kind of a choppy day, but also that's normal. I mean, I don't expect to make money on every trade. Now I'm speaking, when I speak about today's trades, I'm speaking about day trading, but you can transfer that rationale to longer term investing as well. So what we want to do is look for abnormal activity in the market, because that often leads to big price moves, but we also want to combine the abnormal activity with other analytical methods to focus in on the stocks with the best potential. Now, when I say abnormal activity, what I mean is if a stock normally trades, you know, up or down 20 cents in a day, like this one was, and normally trades around $4 a share, like this one was through February and March, and then one day jumps up 50 cents and trades 10 times the normal volume, and jumps out of its trading range around $4. Those are all aspects of abnormal activity that tell us that something that that company is doing has attracted the attention of the people who follow that company the closest. And when the market learns about that information, when the rest of the world learns about that information, the stock will go up. I've got a couple people letting me know that they're not seeing my slides. If that is the case for you, that will mean that there's something wrong with the feed getting to you. And oftentimes it's because you're behind a firewall, or it just might be the nature of your computer. So oftentimes if you log out and log back into the webinar, that'll fix it. But I noticed 2 people are letting me know that they can hear my voice, but they can't see the slides. So that may be some security software that is blocking the video, or it could be just needing to log out and in again. So give that a try. I will say that I am recording tonight's presentation, so if you are having a technical difficulty, you will be able to watch this tomorrow, because I am recording. Anyway, getting back to the presentation here. So this is a stock that really beat the market. It went from $4 to $8 in 2 weeks. And it all started with abnormal activity in the 3rd week of March. So you can see right here, we have some abnormal action. I'll elaborate on that concept in just a moment. Here's another one that beat the market. This stock going from around 50 cents when it started its upward trend to $1.50. So a 300% gain in 4 months. But it also met the criteria of my Stock Scores Simple strategy, which is the one I'm going to go through with you tonight, and we're actually going to apply it tonight using the market scan tool in a moment. But all of the criteria came together here in early November, and the stock went higher from there. So what I'm going to try to show you tonight is some of the rules for that. But before I do so, I want to talk about how we measure performance with my approach. We must always measure our performance in the market in consideration of risk. Okay, so if you risk $1,000 and make $2,000, you've made a 2-to-1 risk reward. If, however, you make $1,000 on a trade, but your potential loss was $2,000, then you haven't really made a great trade, because the risk was much greater than the reward. So we want to judge our performance using this concept of reward for risk. And very simply, it's the risk is how much you might lose if you're wrong, and the reward is how much you make if you're right. So if you buy a stock at $10 and you have a stop loss at $9, you are risking $1 per share. And if the stock goes up to $13 and you sell it, then you have made $3 per share. Well, you made $3 per share and you risked $1 per share. So you made a 3-to-1 reward for risk ratio. Now this leads into what I call the economics of investing. When we are judging our performance in the market, we must measure success over a large number of trades. What we want to do is figure out the expected value of our trading approach. So let's say we buy a stock anytime it breaks to a new high after going below a new high for at least 2 months. That's a real simple strategy. I'm not saying that that strategy would work, but let's say that if a stock hasn't been to a new high for at least 2 months, and then it breaks to a new high sometime after 2 months, we buy that situation. That could be a strategy, all right? And let's say we test that strategy. We look at 100 examples of when that happened, and we find that 70% of the time the strategy was effective and 30% of the time it lost, and 70% of the time it made $2 per share on average, and 30% of the time it lost $1 per share. We can then calculate what the expected value of the trade is. So here's another example. Excuse me. Suppose that we have a strategy. 60% of the time it loses money, 40% of the time it makes money. The average loss is $500 and the average winner is $1,500. I want everyone to take a moment and calculate how much you make or lose after 10 trades. And I'll just pause for a moment and give everyone an opportunity to try and figure out what the answer to that question is. All right, so have you figured it out yet? Well, let me show you the answer. So if 6 times out of 10 we lose $500, that means after 10 trades we have $3,000 in losses. If 4 times out of 10 we make $1,500, then that means out of 10 trades we have $6,000 in profit. Our net gain, therefore, is $3,000. So even though we had a strategy where we lost money most of the time, we lost money 60% of the time, we actually made a $3,000 profit after 10 trades. And the reason is because our losses were smaller than our winners, and the success rate was good enough in consideration of that win-loss percentage that overall we made money. So this particular strategy could be said to have a positive expected value because the average profit after 10 trades was positive. So what I find when I'm applying my strategies, and it really, and this is a generalization, but it really doesn't matter if I'm day trading, swing trading, long-term trading. If I do 10 trades, I find that out of the 10, I'll have 2 bigger winners. And by a bigger winner, I mean a reward for risk of greater than 5. I'll also have 4 to 5 losers and 3 to 4 smaller winners. Now my losers should be right around a loss of 1 risk element. It's usually a little bit more. 1.3 is what I sort of budget on. And my 3 to 4 winners will be somewhere between 1 and 4. So what happens is that the small winners and the small losers tend to kind of balance each other out. But it's the 1 or 2 big winners out of 10 where the profit comes in. And that is why it is important to be patient with your winners. Because they don't happen really statistically all that often. But when they do happen, they provide you with all of the profit that will pay you, every 10 trades. If you don't have the discipline to let those strong stocks continue to move higher, you will not do that great. Because you'll have some small winners, some small losers, and they just kind of balance each other out. Without the occasional bigger winner, you don't get the real profits that allow you to beat the market. My point in telling you this is when you approach trading, you can't expect to be right all the time, and you can't expect that your winners and losers to be the same size. You can have some big ones, you can have a lot of little ones, and the little ones are going to kind of balance each other out, and it's the big ones that present the profit. All right, so tonight I'm going to walk you through one of my strategies, something called the Stock Scores Simple. Now I'm going to do a simple version of it because I don't want to teach all the rules tonight, but I'm going to give you the basic concept. So what we are looking for when we are looking for position trades using this particular strategy is a predictive chart pattern and stock scores indicators that are in the right place with the right values. Okay, so I'll talk about the rules in just a moment. But going back to the webinar I did last Thursday, it's a lot of those concepts we talk about. Breakouts through resistance, from low price volatility, from optimism, which is rising bottoms. And we're going to add in tonight the use of the stock scores indicators. We have 3 rules for this particular strategy. The sentiment stock score needs to be greater than 60. The signal stock score needs to be greater than 80. And we want to see a predictive chart pattern. Okay, so let's look at some examples here. Here was the first stock that we looked at tonight. So rule number 1 is this sentiment stock score, which is the green line on the chart. You look down where my number 1 is. That green line is above 60. The blue line, which is a lot sharper and bounces around a lot more, it needs to be above 80. And you can see at point number 2, it was above 80. And then point number 3 is our predictive chart pattern. This particular pattern is something called an ascending triangle. So I can draw a flat line across the tops and a line across the bottoms. You can see that those 2 lines are converging toward one another. We talked about that last Thursday. And if you missed last Thursday's webinar, you can go to my YouTube channel and watch it. It's recorded and posted up there. So you go to YouTube and look up stock scores, you'll find it. You can see that the bottoms are rising. That's a sign of optimism. We have a breakout through resistance with abnormal behavior. Our volume spiked up. We got above 60, above 80, meets all of our rules. So as a position trade, this qualified, and the stock did quite nicely. Look at another example. Sentiment score, the green line on our chart, is above 60. Signal stock score, above 80. And a predictive chart pattern. This pattern here is called a cup and handle pattern. We have low volatility here, we have a breakout, we have strong volume, strong stock scores, everything is satisfied, and that started that stock into a market-beating upward trend. So now let's go through the process. We're going to do this together. I'm going to show you the process for finding trades. We're going to use the market scan tool. I'm going to use a specific strategy called the Stock Scores Simple. It is a strategy that is available to members of Stock Scores, those who've taken my courses. And we could adjust that strategy based on whether we're looking for yield or capital gain. We'll just do it without that much consideration of that concept. So let me just jump into Stock Scores now, go to the Market Scan tool, and I'm going to select the Stock Scores Simple Canada. So we'll do Canada first. You'll notice I have Canada and the US separate. And I'm going to run the scan. It found 7 stocks. We're going to view these in a slideshow chart viewer. So I've just changed this to slideshow. And I'm going to click on go. And now I get nice big charts to look at to determine whether the stock has everything I want to see. So let's look at this one first. Yes, it has the stock scores where they need to be. It's above 60 and above 80. However, this stock is not breaking from a high probability chart pattern. This stock has already been going up for 3 or 4 weeks. And so it's a good stock if you own it. That's one of the reasons it's got good stock scores. But it's not something I would consider today because it doesn't have the right pattern. So I just hit the right arrow and that takes me to the next chart. And again, we're above 60 and above 80, but we do not have a predictive chart pattern. A big part of what I teach my students is how to read charts. And once you've learned how to read charts, you will know that there is a predictive pattern right here, and there is a predictive pattern right here. And if you look at those times, predictive pattern, and then go down to the stock scores, we see above 60 and above 80. And again here, predictive pattern, and we go down, and above 60 and above 80. Today we have above 60 and above 80, but we don't have the predictive chart pattern, so I go on to the next chart. And here we do not have a predictive chart pattern, so I go to the next one. Here again, no predictive chart pattern. We want to see stocks breaking from a sideways trending price pattern. Okay, this one has some potential. This is Onyx. It's building what's called a cup and handle. I'd like to see this handle part of the pattern form for a little bit longer, and if it can then break out through 83, it'll be pretty good. Let's just take a look at the longer term. Yeah, the stock is already well into its upward trend, so it'd be more of a continuation play, getting a little bit risky because it's been going up for so long already, but still a good looking stock. If you own this stock, Onyx, I would say hang on to it, but there might be a potential to buy it if we get a breakthrough 83 as well. All right, so that's how we use the market scan. Now we're going to do it again. I'm going to go Tools, Market Scan. This time we're going to do it for the US market. And so I select the stock score, Simple US, run the report, and it has 55 stocks. Now if I have to go through 55 stocks one at a time, it's going to take a while. So I have another way to view charts. Instead of viewing in a slideshow, which is what I did the last time, I can select to view it in the gallery view. So do gallery and click on go. Oh, first I got to say select all here. So with the gallery view, you can look at 10 charts per page. So you can see here there's all these charts on the page. So now I can go through these a little quicker. So the first one looks interesting to me. I'm going to blow this up because I can see that it has switched from falling tops. We talked about this on Thursday last week, which is a sign of pessimism. And now we've switched to rising bottoms. So I like that. We've been trending sideways with rising bottoms. All that this stock needs to do is make a break through this resistance at about 380, 390. So I want you to watch this stock in the next little while, because if it can break through, call it $4 with some decent volume behind it, it will have given you a pretty good chart pattern setup. So I wouldn't buy it yet, but I do think it's one to watch because of the pattern that's building. Okay, so I'm going to go through these a little more quickly, and when I see one that has some promise, or when I see one that's a good example of what we want to look for from the past, I will pause. So I'm going to pull this one up. We're actually a day late on this one because yesterday it broke from a cup and handle pattern. Now I'm going to use a little drawing tool I have called Snagit. Snagit is a tool you can get off the internet at snagit.com. I think it's about 30 bucks or something. Now Snagit allows me to draw on charts. So I'm just going to take out my drawing tools, draw a line across the tops, draw a line across the bottoms. You can see that those two lines are converging. So we had lowering volatility. And then yesterday we had a breakthrough resistance at $5.40. Good volume, above 60, above 80 on our stock scores. So yesterday, this one was a pretty good candidate using this strategy. And today the stock went up, what did it do? Up 4.4% today. So if you had done the scan yesterday, would have been a good candidate. And if you bought it this morning, let's say, you're up 4% or so, and it remains a good hold. So as I said, I will show you some examples of good ones, or I will show you examples of ones that are good examples from the past. This one's not bad. This is a pattern here called a flag. So there was our break again yesterday. You could argue the flag break was about a week ago. Either way, you'd be right. But again, look at yesterday, above 60, above 80, breaking through a line of resistance from sideways trading, optimism, had a lot of what I like to see. And up 15% today. Maybe we should have done this market scan last night, not tonight. Wendy's, not crazy about that. So I'll just cycle through these again. This one looks interesting. So this is Kulicke & Soffa. They're a chip maker. And it's a kind of a weird chart because it actually moved down 3 days ago and then came right back. And so it actually has broken out through resistance today. The only downside is it was a bit choppy because of the last 2 days were a little bit volatile. And that makes the message of the market a little bit less reliable. So I like this. I would rate it a 7 out of 10. I wouldn't give it an 8 or a 9 out of 10. But I think it's got good potential to move higher from here. And you're looking for, a longer term position trade, this one looks, like I said, a 7 out of 10. So moving along. All right, so this one is not one we would consider today, but here's an example of a stock that broke its downward trend, switched to rising bottoms. We talked about that last week. Broke from the rising bottom at $9 at the start of October, and it has gone up and up and up, and is now to $14. So not a buy today, it's certainly a hold today. It still looks good, but I wanted you to see that pattern from early October. Okay, let's see if we can find any more that are good for today or a good example from the past. Now we've got 55 stocks to go through, so I'm going to go through these fairly quickly. Here's one from the past. There's that pattern we saw on the first chart that I highlighted. I can't even remember what the symbol was, but the very first one I highlighted in the US listing here. Remember I said it broke in the downward trend, was building a rising bottom with low volatility, and it just needed to break through $4. I think it was, I can't remember. I'll start with a Z, I think. Zixi, maybe? Anyway, showing my age, I can't even remember what I talked about 3 minutes ago. Here's an example of that happening 3 weeks ago. Okay, there was the breakout through 22 from a rising bottom, and above 60, above 80, breakout, and it's gone from 23 to 27 in the last few weeks. So I'll just continue to go through these. Okay, don't see any fresh ones. Dow Chemical's close. It's breaking through some resistance here, but it's going to get stuck because of this resistance over here. So I think it'll go sideways for a bit before it breaks out. So I'd be a little bit cautious with that one, but certainly has better potential than most stocks, just not really outstanding yet. All right, so we're getting into the more expensive stocks now. I sorted my results by price, so I think we're almost done this. Yeah, we got 2 more pages to go. And again, as soon as I see something that I like, I will stop. Or if I see a good example from the past, I will stop. This one has some potential. It's got resistance at 74-ish, rising bottom right now. Just needs to make a break. It kind of tried to break out today and it got stuck. But that would be one to keep an eye on, IMPV. Now, we're almost done. 1 more page to go. And then we'll go on to the next concept. Costco is one I wrote about in my daily newsletter on, what's today, Wednesday? No, Thursday, so it must have been Tuesday that I wrote about it on this flag break right here. So if you read my daily newsletter, you'll remember I highlighted Costco because it was breaking from a flag. That's a continuation pattern, more of a swing trade, but it's actually gone up a little bit the last couple of days, so it's been a decent swing trade there. And I think that's it. All right, so that's the process. So we just analyzed the entire US and Canadian stock market, and it took us less than 10 minutes. This is a process that you would do daily. Now, if you don't want to do the process daily, then if you only want to do it once a week, then we have a different strategy. If you only want to do it once a week, then what you do is you change your chart, your default chart, to a weekly chart. So I'll do that now. I showed this the other day, but do it again. So I'm selecting weekly, 3-year, create chart, and then I go market scan, select the Stock Score Simple Weekly Canada scan, run this report, and now I go through the same process, but this time I'm looking at a weekly chart, but again, for predictive chart patterns. I can teach you the patterns, I can show you the process in a little more detail than what we've done, going through the risk management, knowing when to sell, all of that stuff are things that I teach my students in my course material. All right, so I'm just going to leave that up for a minute and pause because I need to clear my throat. Hold on a second. All right, so what are the components of a trading approach? These are the things that I think you need. First of all, a strategy. That's the rules for when to buy, when to sell. You need some skill to read charts, knowing what to look for in a chart. It does not be complicated. My method uses 6 key components of charts to determine whether the pattern is good. You need a process, not only the rules, but the step-by-step process that you do to identify the stocks that meet the criteria. So when I day trade, I have a step-by-step process. When I position trade, I have a step-by-step process. Our process for position trading utilizes stockscores.com and the market scan. When I day trade, I have some other tools, which is what we showed on Tuesday. You need tools. So my tools for position trading is the StockScores market scan tool. When I day trade, I use TradeStation. You need emotional control and discipline. None of this stuff will work if you are emotional and you don't follow the rules. So that sounds easy, but for many people it's difficult to manage their emotions. And then the final thing, if you're going to invest or trade the market, is you need capital. My number one goal for myself and all my students is capital preservation. We don't want to blow up our accounts. If you don't have money, you can't trade. So the number one thing we go into every trade with is risk management, knowing where we will take the loss if the trade doesn't work. Now, how do you learn how to do this? My way, the way that I did it, is I taught myself. It took me at least 8 years. I'm still learning 26 years later, but I started getting successful after about 8 years of doing it. And I paid a lot of expensive lessons, wasted a lot of time before I really figured it out. Once I figured it out, I made a lot of money quickly, but it took a long time to get to that point. The other option is to have me teach you what I already know, and if you do that, you're going to benefit from my 25 years of experience. I have broken every rule, I've made every mistake, and I can help people avoid those mistakes by teaching them my method. The process: read my book first, do the foundation course second, which is the theory, and then apply my strategies third. You can do it all in one swoop. I mean, it takes a couple of days to read my book. I had one guy read it in one night. The foundation course material takes you, I would say, anywhere from 2 or 3 days to 2 or 3 weeks, depending on how much time you put into it. It's probably about, I don't know, 10 to 15 hours of time to get through the foundation material. And then the strategies, you're not going to do them all. You're going to focus on probably 2 strategies, and each strategy might take you an hour or 2 to learn and watch the video and understand. And then it's just practice, and there's no replacement for practice, because it's kind of like riding a bike. I can teach you in a book how to ride a bike, but you still have to get up and do it and fall down once in a while. And so that's the final step. So the StockScores Education Center is where you learn how to do this. The foundation lesson modules have a written component, a video, assignment, and a test. And then the strategies have a written lesson and a video. So jumping back to StockScores, if we go into education and go into foundation, you can see that there are a bunch of modules here to teach you the theory behind my strategies. So module 1 is got a written component. You read that. You can print it out if you like. Step 2 is the video. So I recorded a 30 or 40-minute video explaining the 6 elements of chart patterns, which is what this module is all about. Then you do an assignment to practice what I have taught you. And finally, you do a little multiple choice test to make sure you understand the concepts. If you get a lousy score on the test, you need to go back and study some more. Once you've done that module, you move on to the next one. Do you have to do every module? No. Some of these are more advanced and not really necessary, but for people that want to develop their own strategies, you might want to do these 2 modules. If you're having problems with emotional control, this is a good module. It gives you some methods to overcome your emotion and become more disciplined. Not everyone has an interest in options. I have written a little article about the basics of options, and that's there. There's no video for that one. All right, so once you've done all that, then you're ready to learn my strategy. So if you want to learn the StockScores simple strategy, well, there's a written lesson and there is a video. So you can watch the video. It's, I don't remember how long, it's probably half an hour, maybe 20 minutes. And that video will walk you through step by step the process plus what you need to do in terms of your rules for when to buy, when to sell, and how to manage risk. For those who have an interest in active trading, then you would look at the active trading strategies. And as I said before, you don't really want to do more than 2. So some people will say, okay, for the majority of my portfolio, I'm going to position trade because that's my retirement. But I like day trading, so I might put 20% of my cash into day trading, and I'm going to focus on the wave and the intraday pullback strategy, which I will do Mondays and Tuesdays because I don't have to go to work those days, or I work the night shift those days, or whatever. Or I don't golf those days. I mean, if you're retired, you've got obviously a different schedule. So you build trading around your schedule. Trading doesn't have to be the thing that guides you. You can guide how you want to trade. So as I said, the foundation is the theory. It gives you access to the foundation lessons in the Stock Scores Education Center. Then you start working on the strategies, either investor or active trader or both. Investor strategies, or the investor course, teaches my strategies for investing, gives you access to my market scans. You get email support from me as long as you are a member of Stock Scores. You get a free membership for 6 months, and after 6 months, your membership is renewable at $300 per year. So relatively low cost to keep things going. You never lose access to your education. So you don't have to pay $300 a year to maintain access to the videos that you've bought and the lessons. But if you want to use the market scan tool, that costs you $300 a year after the first 6 months if you take the investor course. If you want to do the active trader course, same thing. You get access to all of the investor material plus the active trader material. And the big bonus, or the reason why the active trader course is more expensive, is because I give you my proprietary real-time indicators for TradeStation. And these are powerful because it will help you find trades before most people. And I can get into a trade before the crowd figures it out because of the tools I use and the indicators that I've developed. I don't use what everybody else is using. I use my own thing. There is one other education option. It is mentorship. If you want me to coach you one-on-one for 6 months, then you can sign up for the mentorship course. I don't like to take on a lot of people with this, so you have to apply for it. And I won't be starting mentoring people until January. So if you want to take the course now, you can study on your own between now and January, and then we'll start the coaching in January. Just because Christmas is coming up, people are on holidays, I'm going to be traveling, so it doesn't make much sense to get the coaching going until after the holidays. We do our meetings by, much like this webcast is, by web, but you talk to me, I talk to you. We usually have either a phone connection or a connection over Skype, and I can show you my screen, you can show me your screen, and I just teach you what you need to know. So if you say, Todd, I want to be a day trader, I understand risk management, I don't want to waste my time on that, but I'm really having difficulty understanding how to make TradeStation work. Well, we're going to spend a few of our sessions working on TradeStation. I'm going to give you homework to do. And I'm going to send you away for a week to practice something, and then we're going to come back with another meeting. Usually our meetings are about an hour long. And I'll say, okay, got that concept figured out. Now I want you to do this, and I'll show you how to do it. And then you go away and do it again. So it's a great way to learn for people that want that one-on-one coaching, but because it's a lot more of my time, it's also more expensive, and I'll explain the pricing in a moment. Anyone who purchases my course can get this live training for free this time around. So at the end of November, I will start some live training. So much like this webcast, I will be walking you through the foundation material on Saturday from 9 till 12. It may take us a little longer. I think last time it took us 3.5 hours. But anyway, for three or 4 hours, we'll go through the foundation material together. And then on Monday in the evenings, if you take the investor course, we will do market scanning. So for about an hour, we're going to practice doing the market scans, practice picking good stocks. I'm going to show you why not to take some stocks. I'm going to make you pick some stocks. I'll get you to write down symbols of the stocks that you like as we go through the market scan together. And then I'll tell you what I like, and we'll compare it with what you like. And if there's a big difference, then I'm going to explain, why you shouldn't have taken one, and maybe why you should have taken the one that I took, that sort of thing. So it's a very back and forth kind of process. We do that 4 nights in a row for about an hour, maybe a little more each evening. So that's Monday to Thursday, November 30th to December 3rd. For those that register for the Active Trader course, you get all that, plus you also get to watch me trade live. So Monday to Friday, for the first 2 hours of each day, I'm going to trade live. I may trade longer than that for everyone to watch. It just depends on what the day is. Some days we're going to focus on strategies where the signals tend to come in the first hour, so it doesn't make sense to go all day. But at least one of those days we're going to focus on my wave strategy, which is a strategy that gives you signals all day long. And so at least one of those days we will go all day long and we'll focus on the wave strategy that day. And I'll show you what I buy, what I sell as I do it. And more importantly, I'll show you the process so that you can see what I'm doing step by step. The beauty of these live sessions is they're all going to be recorded so that you can go back and watch the video later 100 times if you want to really make sure you get it. Because this stuff is simple, but it takes practice. And if you can watch me do it over and over again, then it's a real fast way to learn it, so it doesn't take you 8 years to figure it out. Hopefully it takes you a couple months to get up to speed. So the special offer is that anyone who purchases, registers for the investor or active trader course before November 26th, which is next Thursday, so 1 week from today, you will get the Foundation Live and the Strategy Application Series for free. So the Foundation Live on Saturday, plus if you take the investor course, you get the investor market scanning Monday to Thursday. If you take the active trader course, you get the Foundation, the investor market scanning, and the active trading live trading sessions Monday to Friday. So that is a $500 value. You're getting I don't know, I guess probably 15 hours of bonus training for free as part of this offer. Course pricing, Foundation course, which doesn't include any of the live trading, but if you want to get into this slowly, Foundation course is available for $995. The investor course, $2,495. If you've already taken the Foundation, then you can upgrade to the investor. Just log into Stock Scores and you can see the upgrade fee when you go to the education area. Active Trader is $34.95. Mentorship is $74.95. All prices are in Canadian dollars. I know we have lots of people here from the US and some from, I think there's a couple here from Hong Kong. So if you're paying in US dollars, you get a bit of a benefit because this is priced in Canadian dollars, and the Canadian dollar is about 30% less than the US dollar right now. If you want to upgrade, so like I said, let's say you took the investor course a year ago and you want to upgrade to the active trader, just log into Stock Scores, go to the education area, and it will show you, once you're logged in, what the upgrade fee is. It's basically the cost difference plus $250. If you took my course 2 years ago and you're thinking about doing the mentorship now, send me an email and I will look you up and I'll be able to give you the upgrade price for that. So the Stock Scores education page, the page that has a bunch of videos, more information on the courses, that can be found at stockscores.com/learn. stockscores.com/learn. All right. Now, I'm going to throw up a poll right now. While I put this poll up, and it's the same poll I've done in every webinar, so if you want me to send you an email, the email is probably going to go out tomorrow or Saturday with some more details about the upcoming class and basically some links so you can register. You can register right now. Just go to the stockscores.com/learn page. But I will be sending an email out to anyone who expresses an interest in either of the courses. If you're one of my past students, let's say you took the course already and you just want to repeat the course, I have already sent out that email. If you did not get it, it means it probably went into a spam folder or a junk folder, or your ISP just blocked it. For instance, if you're on Shaw, there is a good chance you did not get it because Shaw, which is an internet provider in Alberta, it's all over the place, but primarily Alberta, I think they may have blocked the email because I have so many customers in Alberta that I send out an email. There's all these people that are getting the same email. Shaw thinks, oh, this is spam. So I think a lot of you maybe didn't get that. So long story short, if you did not get the email as a past student and you want it, just send me an email tomorrow or tonight and I'll make sure I send that to you if you have an interest in repeating the class. The repeat fee is $195. All right, so I'll leave that poll up for another moment. Now, the other thing I'd like you to do is if you would like me to look at a stock or if you have a question, now is the time to type it into the question box. I'm going to look at maybe 10 stocks and answer any questions that you have, and then I will sign off for tonight. All right, so I'm going to leave that poll up for another 10 seconds or so, and I appreciate it if you answer it. If you voted or answered this, last week, I have you in the database already, so you don't have to worry about it too much. But either way, put that up and then I will close this poll in just a moment. I'm going to give you another 5 seconds. 4, 3, 2, 1, 1.5. I still see people voting. This is like last minute jab at the buttons here. Okay, so I'll close that down. Thank you very much for voting or answering the poll. So now what I'm going to do is try to answer some questions. I'm going to jump back to stock scores so I can bring up some charts. And I'm going to make my chart, I'm just going to take my chart back to a daily chart because I had set it to a weekly chart. So let me just do that quickly. So I'm going to go in here, go daily, 8 month, and create chart. I'd prefer the questions tonight focus on position trades, not day trades, because that's our topic tonight. All right, so let me just make my little question box here bigger. Let me just see what I have for questions first of all. When you see a breakout, do you buy the stock that day or wait until the breakout is confirmed on the next day, I guess is what you're asking. Well, it depends when you do the research. Like if you have the time to do your market scans before the market closes, I think you're better to buy it on the breakout day. If you wait until the next morning, it's a bit of a trade-off. One, the stock might gap up the next day, and so you miss it a little bit or you pay more. On the other hand, it could also pull back. So I find that 65% of the time after stocks break out, they pull back. And so that would say to you, well, maybe I should just wait for the pullback. The problem is the 35% of the time that they don't pull back is also the stocks that tend to do the best. So you can either buy them the day of or the next day. You can wait for a pullback, but you might miss some of the winners. Can you look at these stocks? SID in the US, so let's start with that one. SID. So SID I like. I would rate that one a 7 out of 10. And the other one that you asked me about is CAS on Toronto. So for Toronto symbol, you have to put T dot and then CAS. So I'm pretty sure this one's good. It's a good hold. A little late to enter it now, but if you own this already, I would hang on to it. I don't think I'd buy it now. Okay, Apple. So I've traded Apple a number of times in the last few days, and I think longer term I wouldn't touch it. Like I said, I've day traded it. It's been a good day trader because after Goldman Sachs put out a buy recommendation a couple days ago, it's actually done pretty well. But it's still, in the big picture, it's still got falling tops. It's still below resistance. So you can see the stock scores aren't green yet. They're still in the blue. So I wouldn't do it for a longer term trade just yet. LEA. Lear Corp, good hold. I wouldn't buy it here, but if you own it, I would hang on to it as long as it doesn't close below 120. V.BBI. I don't like it here, but if it breaks up through 20 cents, it will have given a pretty good reversal pattern. Not a very liquid stock, only traded 5 times today, so it makes it difficult to move in and out of it. Obviously, the energy sector is negative, so this stock is only going to make a move if they have something specific to them. If they go find an oil deposit, I assume they're an oil company, then that would make the stock go up regardless of what the energy sector is doing. But generally, the energy stocks and the venture aren't doing very well, so I'd be pretty cautious with it. REXR. I think if you own this, I would hold on to it. It is coming into resistance at 16.5, so I'd dance close to the door once you get up into the 16.5 mark because it'll probably get stuck there. I would not buy it right now. KBIO. So KBIO had a huge day today on, it started behaving abnormally 3 or 4 days ago. It's been a good day trader because of that. Today, a huge gap up. Never gave a day trade entry for me today. I was watching it all day, but didn't really like any of the setups. And I think this is a stock that you can only trade if you are a day trader right now because it's just so volatile. To buy it as a longer term trade, you are just taking on too much risk. Microsoft. So another question, if you buy the active trader program, do you get the investor program as well? Yes, you do. If you buy the investor program, you get the foundation. If you buy the foundation, you just get foundation. So you get everything below but not above. Okay, so Microsoft, it's a good hold. Wouldn't buy it here, too risky. It's well into an upward trend already, but I would hold it as long as it can stay above 52. T.PWT. PWT I took on as a swing trade a couple weeks ago, got stopped out today, so unfortunately it's broken through support. It had a good 1 or 2 day run and it just didn't follow through, so I would avoid the stock right now. T.CFP. I'm going to do a few more here and then we'll wrap it up. So CFP, it's breaking from a rising bottom with some pretty good volume today. It's got a lot of overhead. I would rate this a 6 out of 10. It's not great, but it's not bad either. It's got some promise. My only concern is there's a lot of people that own this at higher prices, and it's going to encounter some resistance as it tries to go higher. So I think it's good, but not great. Okay, ANFI, which is a stock that I own back here, sold it too early, unfortunately. Good hold if you own it. I wouldn't buy it here. But if you own it, stick with it. And I think I'll make this the last one, and then I'm just going to answer a couple general questions. IDTI, good hold, too late to buy it if you don't already own it. You can see here it was falling top, switched to rising bottoms, broke from a rising bottom. I'm not sure whether the stock scores were quite good enough there, but that anyway, that's what started the upward trend. So some of the concepts we talked about last week are there. All right, so someone is saying if I'm showing graphs, I can't see anything. Again, I think that's probably a firewall or some issue on your side. I find that about 1% of people that use this software have this problem, and I don't know the answer for you, but that's why I record it as a video so you can come back and see it later. They're asking about Walmart, so I will show that one. Walmart is in a downward trend. I would stay away from the stock. As a day trade, it's been good the last 3 or 4 days because it's been moving up in the short-term time frame. Let me show you this actually. It's kind of a good concept to talk about. So here in the long-term time frame, daily, it's in pessimism. Look at the stock score, really low. But if I look at a 10-day chart and make this a 15-minute chart, you can see that we've actually been rallying on that time frame. So if you're a shorter-term trader, like I am, I've traded in and out of Walmart a few times in the last 4 or 5 days. But as a longer-term trader, I wouldn't touch it with a 10-foot pole. All right, so I'm going to wrap up there. If you have any other questions, I'll throw my email address up again. There it is, tylerb@stockscores.com. Follow me on Twitter @stockscores. Twitter is a great tool. Again, I'm trying to get to 1,000 followers by the end of the year, so help me out. Tell your friends. Follow me by going onto Twitter. I've got lots of free videos on YouTube, like I think over 300 of them. So go to youtube.com/stockscores.com. Subscribe to my YouTube channel. I think I'm getting close to 2,000 followers on YouTube, so let's try and get that to 2,000 by the end of the year. And every week I post a free video analysis of the markets. It's a great thing to learn, and it's completely free. So make sure you subscribe to me on YouTube, and you'll get alerts when I upload a new video. I want to thank you all for joining me tonight. Again, if you expressed an interest in my courses that are coming up anytime in the last week or two, I will have an email out to you in the next couple of days. If you want to register for the class, just go to stockscores.com/learn. You can go to the home page, click on this link right here, learn more, and there is the page that has all kinds of videos on the different courses we offer, and you can sign up right here. So right here, you just click on the link and it'll allow you to sign up. Thank you very much for joining me tonight. We've got one more webinar coming up on Tuesday of next week, so you can register for that one. Of course, it's free as always, and then the deadline to take advantage of the offer for the upcoming November class is Thursday of next week. So don't leave it to the last minute. The sooner you sign up, the sooner you can start studying so that you can get that much more out of the Saturday class. You'll just have a little bit more time to go through the material so that you can be ready for the Saturday class. Thanks everyone, have a good night.